the numbers last night weren't terrible. I mean, they only missed the revenue number by 1%. Part of that could be explained away by FX. I think Google is probably, of the FANGs, the more difficult one to model from an FX perspective. But then, when you look at, the individual line items, the core Google business, still grew, 22%, a slight deceleration from the second quarter, but that's off a tough comp. So still solid growth from the core Google website business. The network business, that was solid growth. The other businesses, the cloud, the hardware, the Play Store, growing 36% year over year, in line with the first 2 quarters. So still solid growth you got out of Google. I think, Google, the profit beat was partly a tax rate benefit there. But overall, I think it was good, solid results out of Google. I look at Alphabet as more of the defensive play of the FANGs. Good, solid multiple support for the stock. Several levels from a growth perspective. You still have search, which I think has proven to be resilient from multiple different threats, whether it be social media advertising, whether it be Amazon coming to the space from an advertising perspective. You have YouTube that continues to grow strongly from a user perspective, as well as from advertising. You still have the cloud business, which is growing strongly, is becoming a formidable competitor, I think, to AWS. And you still have, Waymo, which is, I think, the sleeping giant.
Yet, Victor. So this is a FANG-related sell-off, not an Alphabet-related sell-off. Or what is it? It doesn't seem like it's specific. Do you have a good explanation?
It's a volatile market.
Tie these two together.
Right.
What I think is interesting is that the other line items on both these businesses, right? So for Google, the other line is going to be the cloud thing that's getting into Amazon's AWS, and for Amazon, the other line is the advertising business, which is getting to Google. They're still small relative to each other, but we're now in this area. I feel like when you're looking at top line misses, where's this growth going to come from? Each business is getting into other areas that, like, where can I steal share, right?
When you saw, as the numbers came out yesterday, I don't know if you were watching CNBC.
I was surprised by the top line misses on both these guys.
Well, okay, minor top line misses. You weren't surprised by what the stocks did immediately? I mean, I looked at the Amazon chart. I'm like,
well, given where the market's been for the past few weeks, they were looking for these guys to pull it up, and it didn't happen, right?
I don't even know about price for perfection. It's a wounded market right now.
Right. That's what I think it is. That's why I'm saying that you're giving me all these.
That was my point. I mean, you do have the backdrop of an extremely volatile market, and so any sort of miss from any one of the FANGs, I think, would to take down the entire group.
Is price for perfection.
Well,
$800 billion now.
Yeah, right.
The issue is there was enough of an overshoot on the upside with FANG, where it was a one decision stock and there was really no incorrect price if you paid more for it. If you have to overshoot to the downside, then this is what it looks like.
But you're right. Market sentiment is what's changed here, not the companies.
And to Eric's point, I mean, nothing has changed from a fundamental perspective from either.
I agree with you. My only point
or,
is Amazon going from 1,600 to 2,000
didn't make sense
in that final run. Nothing much changed there either. Right. So, I mean, it was good stuff, but it wasn't necessarily like incrementally that much better.
Today we care about tariffs. Today we care about China. Today we care about global slowdown versus 2 weeks ago when we didn't.
I totally agree with you. My point is just that it works both ways. It's not just like, wow, this is a psychological move when markets are going down.
Right. It's
psychological on the
proof
upside
that
too.
it should necessarily be back where it was before.
Okay, but fundamentally, though, I'm still sort of harping on this top line miss. For both these guys, how much of it was sort of international sort of cutting into these estimates, right? In terms of as global growth starts to slow down, are they having a tougher time finding growth overseas? Whereas in the U.S., I mean, it's getting to saturation point for how these guys operate. I don't know if you guys see anything internationally that's affecting them.
I would say on both, FX certainly was a headwind in the quarter. Google's revenue miss happened in the other revenue line. It didn't happen in anything that you would call core to the business. Search and YouTube surprised to the upside. It grew 22% at a scale that is frankly massive in the grand scheme of advertising. Google is down today because Amazon's down today. And we still talk about FANG as an ETF instead of idiosyncratic reasons for individual stocks. So I would say over the last 3-4 months, we've become much less constructive on FANG as an ETF as we've downgraded stocks like Netflix and Facebook. And I think there's going to be this transition to looking at each one of these names more as individual stocks as opposed to this growth ETF that it's become over the last couple of years.
A lot of investors take solace that the value, I'm thinking about Apple, the other ones are obviously valued much higher. But Apple was $1 trillion, but it's not expensive. You know, you've been hearing that for years. It's $1 trillion, but it's it's still undervalued based on multiples.
And they're each getting.
And so we felt better about
But
it
you
than
hear-
1999.
Less
hear
so
for
than it
years.
was 2
Well,
years
right.
ago.
Right,
But
you hear it for years, and in the meantime, their earnings have gone up and up.
No,
and
I
up.
know,
Right.
but we feel better than what we were when we were all participating in Excite.com.
Apple's a single-digit percentage grower on net income. It's actually has not been a very fast-growing business, but they're buying back an enormous amount of stock. It's
That too, yeah.
Wonderful
Well,
balance
that's-
sheet.
Lots
They
of
would have
cash.
been,
Lots of
at a
cash.
trillion a
Lots
lot
of cash.
sooner if they weren't. Yeah.
Right.
It's a market thing. It is. It's that 8 basis point rise in the 10-year.
Yeah, but the FANG stocks are still underpenetrated versus their traditional businesses that they're attacking. So I think there's a lot of runway for Alphabet. Certainly,
You're
they
whistling
talked about
past the
Waymo.
graveyard, Victor. No, everything's fine.
Well, listen, I think we do have, a very, very volatile market. Possibly the economy that's possibly slowing down from, all the economic data that I'm looking at.
All right,
so we have to factor that in.
We're closer to the bottom, or we're halfway to where these finally make a stand. All of them. What do you think?
Google, I think we're right there. I mean, Google has 106 billion in cash on the balance sheet and trades
How
at
about
less than.
Amazon?
Amazon's a trickier call. I mean, this is going to be about what is Q1 and Q2 revenue growth and whether investors get comfortable with the trade-off of revenue versus profit. Amazon's the trickier call today than Google over the very short term.
And Netflix has its own sort of issues in terms of the cash burn, which is what's kept me on the sidelines for Netflix for the past year.
Yeah. Okay. All right. Thanks, gentlemen.